Welcome to The Explainer. Today, we're digging into a market analysis that paints a pretty bearish picture for crypto. It all hinges on one huge piece of news out of Japan that apparently nobody saw coming.
And that right there is the key. This isn't your everyday market wobble. According to this analyst, something just hit the market that was a complete blind spot, and it's forcing everyone to rethink their positions.
And this is the number we're talking about. $500 billion. That's the potential selling pressure that just materialized out of thin air, and it's now hanging over all risk assets, but especially crypto.
Okay, so what is this news that's causing so much concern? Well, the analysis traces it all back to a single, pretty powerful catalyst, and it's coming straight out of Japan.
Here's the bombshell. The Bank of Japan is signaling that it might start selling off its massive holdings in ETFs. You know, those big baskets of stocks. Now, to be clear, the analyst doesn't think they're going to dump it all at once. But that's not the point. The point is the threat is now on the table. The market now has to price in this huge continuous wave of selling that could happen down the line. And you know, the timing here just couldn't be worse. This news from Japan is dropping into a week that was already jam-packed with huge economic events. You've got critical U.S. jobs data today, then you've got the big inflation numbers with CPI on Thursday, and it's all leading up to the Bank of Japan's own interest rate decision. It's really a perfect storm of uncertainty.
All right, let's zoom in on Bitcoin. How did this big macro shockwave actually hit Bitcoin's chart? Because, spoiler alert, it pretty much flipped the whole technical picture upside down.
So before we get into the damage, you've got to understand this one key concept the analyst uses, the impulse zone. Just think of it as the launch pad for the last big rally. It was the line in the sand where buyers last stepped in and showed everyone they were in complete control. And there it is. That's the core of the technical problem. That launch pad we just talked about, it just broke. The one support level that absolutely had to hold for the bulls, well, it failed. You see, this isn't just a minor dip. The analysis sees this as a major structural failure with a clear domino effect. First, the foundation breaks. That immediately cancels out the idea of a simple, healthy bounce. And that, in turn, opens the door to much, much lower prices. And it's not just that one broken level. The analyst points to a whole bunch of bearish signals that are all flashing red at the same time. You've got aggressive selling coming back into the ETFs. You have buyers literally pulling their orders, which means they're getting scared. And the price just isn't bouncing where it's supposed to. It's a whole chorus of bad news. And here's what that ETF selling looks like. Over $357 million flowing out of Bitcoin ETFs. This shows that the big institutional players, the so-called smart money, are leading the charge to the exits, which is just adding more fuel to the fire. Now, this weakness we're seeing in Bitcoin, it isn't happening in a vacuum. It's part of a much wider risk-off feeling across the board. That's just a fancy way of saying investors are getting nervous and selling anything they see as risky. And that feeling is contagious. This comparison is so important. The US stock market is looking weak too. But Bitcoin, which tends to move with it, is acting like a weaker version of the stock market. It's like when the broader market catches a cold, Bitcoin is getting the flu. The one real wild card in all of this, for now, is the US dollar. It's just kind of hanging out at a key level, not really doing much. But if the dollar starts to rally hard, that would put even more pressure on assets like Bitcoin. So that's definitely something everyone's watching very closely. Okay, so the bullish case is broken, and there's bearish momentum everywhere. Where does the analyst think the price could actually be heading from here? This table basically lays out the potential roadmap down. For Bitcoin, the next stop could be around $63,700, then maybe $60,300, with a worst-case target way down at $54,400. And for Ethereum, the key levels are around $27.18, then $26.25, with a potential low of $2100. But here's an interesting little detail. Even though both are under pressure, they're not exactly the same. Bitcoin's key support zone has completely shattered. Ethereum, on the other hand, well, it's still technically holding on to its own support zone. It's bending, but it hasn't broken yet. It's showing just a little more resilience. And really, this is the bottom line of the entire analysis. The old idea that this was just a healthy little dip in a bigger uptrend, that's now off the table. The evidence suggests the market has actually flipped. The primary trend is now down, and it's going to stay that way until we see some very strong proof that says otherwise. So this leaves us with the million-dollar question, right? Is this whole thing just a giant, sophisticated trap designed to shake out the weak hands before the price rips higher?
Or are we actually seeing the first domino fall in a new prolonged bear market? According to this analysis, the evidence is pointing pretty clearly toward a new downtrend.